Right. Good morning and welcome back to the London Times. Actually, good afternoon for those who are joining us from the eastern side of the world, and very good morning around 5 a.m. Eastern now for those who are joining from the western side of the world. And let's straight away get started as usual with the hourly chart of Euro USD. Now, can you see that path being filled again? We were expecting a corrective decline just a few hours back in the Tokyo Sydney overlap, right? And you see the price action has now dropped a bit, and we've just issued a fresh buy call in the portal. And for those who booked temporary profits or partial profits right across the 1.0500 handle, I think it's time for getting it back again, because see, this is what I was trying to say. I mean, you take profits around 1.05, let's say one lot or half a lot, and then you cover it up with around 70 or 65, just intraday lows right now. So without doing anything, you just gain 35 points and you're still in the trade. So that actually adds up to the total when you finally take profits around the 750 mark. The only risk here is if we are not able to pick up the turn correctly, then we might miss the entire rally or the entire drop. And that's where a bit of experience comes into picture. Not saying that okay, we cannot miss a trade or we cannot miss a wave, but probabilities are less when you're combining the wave theory and a bit of RSI and a bit of divergence as well. In the morning session, we were looking at a divergence between the dollar index and Euro USD. When dollar index actually print a low, Euro failed to do that. That's a good divergence, all right, along with the RSI and the potential counts here. So if we kind of change the path here, then the next move is probably or should be probably towards the 580 mark. We don't know if it's going to come today or not, but that is where we should be heading in the next few hours or possibly early next week. Uh, 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 let's see how the price action now places out on the New York session, all right? But wave counts are firmly in control of the bulls right now. I mean, the lower degree wave 4 might be in place or just around the corner for the lower degree wave 5 to push higher again. And stop loss remains at 1.02 and the potential target at 1.0750. I'll just flip the chart to a 4 hour. Maybe you might want to just keep a note of what the structure looks like. Once again, for those who are still joining, please be aware that the lower degree wave 2, that is not the minute, but the minute wave 2, could be still unfolding with potential 3 down, 3 up, and another 3 down. Could be a combination or uh, a running flat in the making before the minute wave 2 ends and the third wave then resumes higher. But if that is correctly identified, I mean, if minute wave still unfolding, then believe it or not, the third wave is going to be much fiercer. It's going to be of the same quantum that we just saw a couple of years back uh, in May 2023, actually. All right. So that's the story in the euro. Let's now flip the chart to dollar index. All right, that's the dollar index. 8 cap provided, and we are good on the hourly chart right now. So that arrow was not required. I was actually doing it for another charting, see that pullback coming through. Now this pullback, I mean, could be lower degree wave 4 as well. I'm not saying that we already have lower degree wave 4. That is a sub-minute level. If we dig further, that could be a minor or even sub-minor level. All right, this one, this lower degree wave 4. So the dollar index could be. I mean, if you're book profits, you might want to re-enter on the short side with a potential target, because we are quite aware that the next target is 105.62. Just in case, if you booked around 30, maybe you can cover it around 61 or initiate for the shorts, or maybe you can wait actually for the pullback to go a bit more higher. But I think if it's a wave 4, let's check out with the other side. That's one of the good tools which helped us. It's 53, maybe somewhere around the 60 mark. If it hovers around the 60 mark, and you might want to take a chance of another round of shorts. I tell you what, I mean, selling rallies in dollar index and buying dips in the euro USD is always going to. I've kept on saying this. I think it's for the fifth or sixth time that it's going to end up yielding some profits, provided we keep our stop losses intact where they are supposed to be. And if the risk reward ratio doesn't really match up, then it's actually good to wait for a much larger pullback. I mean, let's not say larger pullback. A meaningful pullback would be enough towards 108.40. But today being Friday, we only have one more session to go, the New York session. Don't expect. I don't know if it can pull out in the New York session itself, that the minute degree wave 2 and start next week lower. But I think it's going to take its own time to reach towards 108.40.50. Maybe during the next week, if you calculate time factor. And by the end of next week, if we are there, it would be nice enough for March decline. All right. So that's the story in the dollar index. Just for those who are joining us fresh, the stop loss for dollar index short positions will go around 109.85 if the provider that you're using is 8 cap. If there is another provider, then just watch out for the date, 3rd of February, 3rd of February high, whichever it is on your provider. Please stay just above that. All right, because there is some discrepancy in the dollar index spot rates between the providers. As far as the larger degree trend goes, it is certainly down or on the downside. High probability of the bears are going to come back in control. It's a temporary pullback, which was expected, and we discussed this last session as well. So it's good for us. It's going to provide us another opportunity to go short. All right. Now gold has been okay. It has dropped to 19. What will the support that we're expecting to be taken out? Let me quickly zoom in a bit. And okay. So the scenario in gold is like first things, it has broken the previous wave 4 of a proposed diagonal structure. I'm saying it's a proposed diagonal structure because that wave 3 could easily go up here, all right, and then wave 4 could still come here, and we could still have a fifth wave right up there. It is still possible. That cannot be ruled out, because you can see that could be wave 3. So you connect the dots, wave 3 and 1, and then on the other side you connect 2 and 4. We can see another high pushing through the 62 mark. all right, and that actually completes the diagonal structure, which is possible. All right, so let's not be completely out of let's not be complacent and think about only one direction or one possibility. But the first step has been done, actually. That's the good news. But we need to see the follow through up there. Uh, I'm just settling up the old structure. Give me a moment, please. Okay, that looks very steep, actually. It could. I would prepare myself with another high possibility towards 62, 65. And that would be an excellent place to aggressively go short. Tell you what. Nonetheless, if the price action continue with the laid path, I mean, if it goes up a little bit retracement and pullback, eventually it has to break. It should break 20. Not just that second wave, but the initial part of the ending diagonal. If it drops towards 2866, then we do have a strong case for a potential top in place, and maybe we could aggressively go and sell after the rally thereafter. All right, we are still the price action is tentative. It's not a free fall yet, though on the daily chart the pattern might be unfolding as an evening star. It's not yet confirmed, but we still have the New York session to go, and the pattern could still unfold as an evening star eventually. But we've got a long way to go actually. It needs to close below 2917 to confirm that evening star pattern. And tell you what, I think I would personally not be surprised if there is another push towards 2962 today being Friday, and from the next week onwards, the bears might come in picture of control. But it's only speculation. We are wanting, or we are towards us negative bias, but we still need further price confirmation. The step one is over. That's the only good part. We need to see the follow through now. So what we can do at the trading point of view, if this is wave one of a lower degree and that is wave two of a lower degree, ideally prices would not go or should not go above 22 or 29.49. All right. So a pullback towards 29.35 from here calls for a short stop about 29, just about 29.49, because if that is wave 2, it should not break above that wave 2 high. That's the objectivity, all right? So place your stop tight around 29.49 and let it run through the next leg lower, and let's see how it goes from there, all right? But we are fairly confident if the wave 2 is in place, the next big drop is towards 28.65, and that could be possibly I don't know if we have a trigger coming in the New York, but if there is, and we still have the entire day to go, quite possible that gold might give it. Remember last Friday it gave in about 60 points, and this could be another one giving up 90 points. All right. Bottom line 2949 should hold if that is wave 2, and looks like it is wave 2, and the third wave could be extending. I mean, that's very much possible. But going long, or even proposing a long trade at this price with all the divergent scenarios in place, uh, of course the hourly chart is hovering around the 40 mark, but that is not a guarantee of a of a long trade. Even if the long trades are there, they are for one more leg higher, and I would not be risking the entire downside for a want of a 0.5% move. All right, it's not a good risk reward ratio. Rather be on the sidelines, wait for a new high to be in place or topped out, and then initiate further shots. That would be a good strategy. You know what you can do is draw an aggressive trend line on the chart like that. Okay. Once you have that aggressive trend line in place, prices should be ideally should ideally remain in the sell zone now. Any push higher into that zone of 20, 38, 35 calls for another shot. All right, and if you are correct in plotting and the trend lines, it is worth taking a risk with a target of 26.75, 28.65. Sorry. All right, so that's the story in gold. We've got pound now. Let me just check the streaming is fine. I don't know which chart I opened up. The counts are missing. Yes, there are. So again, what we were talking in pound, I need it to push higher. First target hit. Slight pullback is also done. By all means, pound can pick up from here itself and move towards 27.80, 84. So hold on to your long positions, please. If you took short-term profits, that's a very shallow pullback, hardly 50 points. Uh, but still, it is a pullback, right? 50 points or 40 points, it's a pullback. An intraday cut of 40 points is not a bad deal at all. You can just go and buy again or add further positions of the existing positions. But please have your stop loss around the 2250 mark. Target is 2800, not only 2800, but okay, we can expect a meaningful pullback after that. So you can exit taking some good profits around the 28 mark, and then a pullback where we can prepare to go long again and add further longs, and then carry it over all the way towards 1.3, actually 1.3300 as well going forward. But let's have a quick look at it. So this guy is also, I mean, RSI, till the time it does not diverge, it's okay to remain on the long side. Now we've got a pullback, okay, and we don't have a divergence yet. So it's a good place to buy, allowing room for another high, and that one is a good one. See, 40, 51. Euro is around 40. This guy is around 51. So maybe another high on the price action and RSI diverging on the RSI makes it a good case for a pullback thereafter. All right, so maybe intraday another cut can be made on the long side now. While we are back in the New York session, we'll again review the story, how it is going. All right, that's the story for pound. Again, firmly on the long side, please. Bitcoins and Solanas, we have limit orders in place, and I think it is still good to have the limit orders in place. 98,500 with the diverging scenario. It should be good to initiate some pullback here. It could be around the vicinity of 95,500 to 96,500, please. That could be the range. We can just adjust the retracements. It's not a big difference at all. But tell you what, 96,900, 96,900 and 95,500. That's the range now for entering on the long side again for Bitcoin. That it has just made the first one, the 38.2%. You never know; it can continue from here itself. So if you feel like you want to go ahead and buy it here, absolutely no problems. But the stop loss cannot be changed right now. So let some breathing space actually. All right, let it have some space to breathe. Let it drop towards 96,900, and then we go long again. All right, that would be a better one. And that then having said that, the next target for Bitcoin could be 99. Not only 99, but it go all the way towards 103. That's the next target. There it is, 103. All right, and Solana also, maybe we'll have to just adjust the range to enter buying once again. That's not a bad deal at all. I mean, the first targets have been met, both of them almost met, and it's very good to see that happen. So what I'll do is let's remove that arrow first. Let's pull out a Fibonacci retracement, and there we are. So the next entry comes around 172, 173, and 168. That range. Maybe you can have a limit orders in place, or I'm going to adjust mine as well. 173 and 96,900. 173 in Solana and 96,900 in Bitcoin. That would be a good one. The next move to go higher towards 192. I'm betting on 211 at least. The previous wave 4. Uh, this structure, of course, it is lagging in time, but wave 1, 2, and the third wave is extending possibly. Because I can see wave 1, 2, and again 1, sideways 2, 3. So the third wave is kind of extending. It's not giving up easily. If the third wave is extending, it's got enough business to complete on the long side, on the north side again. All right, so we are watching the indices. Yesterday was a big blow on the south side. We would be very much interested in taking shots again now, possibly in the next session, New York Live, or coming Monday, or by the end of the next week. I think the stage is now setting up nicely for. It's either bullish triangle complete or a wave 4 complete, and that could initiate a one more push higher, or it's a bearish triangle complete, and bears are in control now. I'm watching for this level, 43,800. A break below that could trigger a huge sell-off. So it'd be good to enter on the short side pretty much sooner. And the weight is coming closer now. All right. So just giving you a heads up for what's coming up in the indices. And let's bring it a pause in the current session. And thank you once again for tuning in. We'll be back again after about 3.5 hours, about 4 hours, sorry, to continue the story in the New York session 2. Until that time, once again, thank you for tuning in, and good luck to your trades, and take care and God bless. Goodbye.